Well, good afternoon, everybody, and thank you very much for joining us. You're most welcome to this presentation, this co-hosted presentation on Big Data, Fintech Future, Banking on Big Data. The webinar is co-hosted by Fintech Ireland and Intersystems. This is the first Fintech Ireland event for 2021, so we're pretty excited here to be part of this, and we'd like to thank very much Intersystems for providing all the wonderful technology that we'll be utilising today's webinar, and for their insightfulness in helping us decide on the topic, and also for all the work they've done in the background, and especially to their colleagues and team at Intersystems. We've got over 200 registrations for today. And so, as I said, we're delighted you can join us. And just to let you know, you come from a very diverse range of financial services companies, including the core financial institutions, including fintech, such as banking, asset management, credit card processing, lending, broking, insurance, and indeed wealth management. Participants are also coming in from government, healthcare, retail and logistics, telecommunications, education, software, media, and consulting, whether it be business, legal, or accountancy consulting. So we have a wonderful diversity in terms of industry here, but they're all focused on financial services or otherwise the application of big data and advanced analytics. Now, in terms of location, folk are coming in from at least a dozen countries, and we are covering from Asia to Africa to the USA, across Europe to our neighbours in the UK, and of course to our friends here in Ireland. Now, what I'd like to do is introduce very quickly or reference our speakers for today, because we're really excited that when we first thought of the idea, the trouble was then trying to identify who would provide really great input. And so we reached out to a fantastic network, and we were delighted that the following folk put their hands up and said they would contribute. Now, I first of all would call out Andreas Papatias. Andreas comes from the European Banking Authority, where he is a policy expert. And he works in banking markets, innovation, product unit, and also focusing on financial innovation. And for those of you who are familiar with last January's EBA report on big data and advanced analytics, Andreas was involved there in pulling together 11 supervisors and with IT experience and helping craft the final paper. So we're delighted to have Andreas speaking today. We're also joined by Neve Lawler. Neve is Director of Analytics at United Health Group. She has over 15 years' experience leading teams with data and analytics, predominantly in financial services sector. And I'm also going to call out now, before I pass to him, Michael Hom. Michael is Head of Financial Solutions at Intersystems, and he's been a technology executive, has more than 25 years experience working in financial services, and I'll also present shortly. In terms of the agenda, if you just forgive me, I didn't press the magic button to move it across there, but hopefully you can see the agenda, and you can also see the names of those who will be speaking. Once Michael has finished his presentation, we will then move to the panel discussion. And the idea of the panel discussion is to unpack a whole lot of the content that we couldn't get through each speaker's presentation, and hopefully to draw upon those in the audience to throw in their questions and comments, and we'll take those in the panel discussion. This is a critically important area for the EU, if not more so globally. The use of artificial intelligence and machine learning, natural language processing, the utilization of big data, and also that of advanced analytics is now going to be critical in a data-driven approach, which is the theme for today. So, Michael, before I call upon Andreas, before I commence the first presentation, you're jumping in now to say a few words of welcome on behalf of Intersystems.
Thank you, Peter. On behalf of Intersystems, I'd like to thank everyone here today taking time to join us for this webinar. At Intersystems, we work to ensure that our clients are able to connect and share and draw insight from their data. these organizations now are looking to utilize artificial intelligence, machine learning to improve their businesses, to really kind of take on new challenges and also to reap the new benefits. Whether you're starting with machine learning, whether you're trying to enhance your teams that you have today, whether you are trying to eliminate data silos that you have in your organization, or you just want to access new real-time data or more innovative and contemporary sources, we welcome the opportunity to speak with you at a later time. Thank you again for joining us, and enjoy. Peter?
I'll take myself off mute. I'm saying thank you there for Michael. Looking forward to your presentation and for you joining also Neve, myself, and Andreas when we move to the panel presentation. So listen, conscious of time, I'll get the show rolling with the Fintech Ireland presentation. And what I will say here is I'd like to say thank you very much to, again, Michael, Andreas, and Neve, because they did share with me their slides in advance. And so I was able to have a think about what they were going to say to ensure that I wouldn't encroach upon their territory, so to speak. So in terms of Fintech Ireland ourselves, look, just some numbers up there, but we have quite a strong presence in the fintech ecosystem. We are tracking some 400 companies that identify themselves as fintech in Ireland, and also through our survey, we are identifying the indigenous and the international fintechs, and we'll talk a bit about that a little bit later. We have a strong presence on social media, so that's often a good way to follow us and keep in contact with what we're up to. And like today's event, where we like participating in events and spreading the word about Irish fintech. Now, let's just pull back for a moment. The utilisation of big data and advanced analytics in financial services as at the centre of the European Union Commission movement, and the use of, and also out of the ESAs, the European Security agencies such as the EBA, ESMA, and of course IOPA and others. Now, in Ireland, why is this important? What are the implications for Irish fintech? Well, first of all, just note that we have over 10,000 firms regulated by the central bank in Ireland. A number of them are fintech, and that doesn't include the firms that also passport into Ireland from the European Union. Ireland's now the third largest exporter of financial services from the European Union. We have 250 of the world's largest financial services companies here. And the funds industry, which comprises of people such as asset managers, who we have on the call today, trustees, custodians, fund administrators, are looking after a whopping $5 trillion of assets under administration. So this is an incredibly important area for that sector as well. We have 45,000 people working in international financial services, and about 15% or 7,000 work in fintech. We probably have around about 105,000 experts, technology sector employees, and of course some of those numbers may have moved around with COVID. I mentioned the survey. If you are an Indigenous fintech company, you are more than welcome to do this and join the survey. Hopefully you guys can see the slides at the moment. I'm just making sure that you have the live view on. If you can't see the slides, would just one of my co-presenters just let me know, please. Thank you very much. So, in a nutshell, Fintech Ireland has created, so to speak, to demonstrate what's in the nutshell, that is, this map of Indigenous Irish fintech. Now, the first thing, again, to say it's Indigenous Irish fintech, it doesn't show all the wonderful international fintech companies that are now operating out of Ireland. On this map, there's some 230 fintech companies. We expect this to grow maybe by another 10, 15, perhaps 20 when we release the next edition very shortly. What you can see on the map is that payments represents one of the largest sectors, closely followed by RegTech, and you'll also see credit and lending, and also InsurTech. Although we don't have a very big Indigenous InsurTech community in Ireland, we certainly have a large number of international insurance companies going through innovative and digital transformation at their organisations here in Ireland. But the point of this slide is just to sort of say that, look, all these firms depend upon the utilisation of analytics. They are crunching big data. The firms that are RegTech are not only crunching the data for their own purposes, but they're also sometimes outsource these to financial institutions. And if you see look at the EBA report, they in fact call out RegTech as an important part of big data and advanced analytics, particularly the utilisation of AI and machine learning. So I just want to make sure the slide is showing there. Now, apologies if I slipped a slide or two, but hopefully you can see that slide there of the map. Now, in relation to the next slide, this is just a map showing the number of electronic money institutions here in Ireland and also payment institutions that have been authorised recently. What's interesting about this is that these are the firms that are subject to relevant obligations imposed by the central bank. And as we see a little bit later on, the central bank has made a few comments about innovation and the issues involved with innovation that regulated institutions must be aware of. Now, many of you will be aware of the EU Digital Finance Strategy. Fintech Ireland was one of the bodies that actually contributed to that strategy. And I'd like to thank everybody that, following one of our events last year, that gave us feedback. And you'll see our feedback collectively on the European Commission's website. As you'll see there, point number 3, promotion of a well-regulated, data-driven financial sector is critical to what the EU is seeking to achieve here. Now, the final strategy, which was released by the European Commission, raises a number of really interesting points. And if you just bear with me, I just need to have a look at my notes to make sure I very quickly cover the more salient points. Now, in terms of risk, what you'll see is over in the right-hand side, it says that at the beginning of the corona pandemic, the use of financial applications in Europe actually increased by 72% in 1 week. That obviously not only produces benefits, but also creates risks. And what you can see in terms of these slides and what the EU is saying is that there are a number of important benefits, but equally a number of important risks that are going to be presented by innovation. Now, I'm not going to steal the thunder of Neve, or Michael, who actually touch on some of these areas in relation to the best practice in this area and also what financial institutions are doing. But what I would call out is that that open finance, which is in the sort of pinkish box on the right-hand side, is an incredibly important area here in Ireland. Although we only have probably about 7 regulated open finance firms authorised or registered in Ireland, it is it's an area which is growing very quickly, and I expect to see more tech fins in that area than I expect to see fintechs going forward. Now, in relation to what our own central bank is saying, what's really important is to keep an eye on their speeches and presentations. In the central bank strategic plan, its intention to foster financial innovation is very clear. But what I've taken from the central bank is some points from Ed Sibley, the Deputy Governor of Prudential Issues at the Central Bank, his speech of the 29th of November, where he talks about how important it is that at the Central Bank that they gather and analyse the data that they receive from firms, which has become so critical to the work that they do. And if it's critical to them, then it's critical to you as an Irish fintech or an Irish financial services institution. And the central bank has also said that once they get the data, their ability to analyse this data is becoming increasingly important as a part of their engagement to supervise firms. So do we expect the central bank to be a lot more out there in terms of understanding what innovation is happening? And in Mr. Sibley's speech, he actually called out, in terms of entities they supervise, that one of the key technologies driving innovation in insurance, for example, is telematics and the wearing of technology, or wearable technology, I should say. Now, Ireland does have a national strategy or proposal for a national strategy on artificial intelligence. Now, the consultations closed back in November 2019. I And without going into this strategy, what I would say, and let's have a quick look at my notes here as well, is that in relation to the strategy talking about the second main bullet point there, firstly, it recognises that countries around the world are developing national AI strategies, and we're seeing this all the time, and they're calling this out in their national strategies, and as a form of competitive advantage as well. But the national strategy in Ireland also calls out ethics, and that's incredibly important when you think about elements of trust. So I'm going to stop on that point about ethics and trust, because in relation to that area, I know that Andreas is going to talk a little bit further about that. Now, just conscious of time, just want to point out that in terms of what central banks and regulators care about, they care about things like financial stability. And in terms of that, you'll see that the Financial Stability Board, as far back as actually 2017, did call out that there are macro risks represented by interpretability issues relating to AI and machine learning, i.e. if it's not handled correctly. In terms of market integrity, we've seen regulators like those in Australia use AI and machine learning to better monitor the market, look for front running and insider dealing. And of course, consumer protection is very important in this whole area. And if you look at the EBA report, Big Data and Advanced Analytics, and many other reports by European authorities, they will talk about consumer protection being front and centre. To mention is that we also have 4 key priorities coming out of the strategy. But again, look at priority 4. How do we address new challenges and risks associated with digital transformation? And we'll talk about that in the also in the adult session. And it's not just all over from the EBA report back in 2020. The European Commission is advancing many other initiatives in here, including the AI white paper. And what I would say in relation to the white paper is that if you have a look at this in terms of the ecosystem of excellence and trust, and I'm going to ask Michael a question on this, is around the demand for skills. 90% of respondents talking about skills, upskilling being exceptionally important. And to go to the end of that, so 72% saying that promoting the adoption of AI in the public sector is also of critical importance. And in terms of trust, 90% said AI may breach fundamental rights, and 68% saying AI may make it more difficult to obtain compensation. So the white paper is really interesting to read. It calls out better use or more use of AI and machine learning in sense of RegTech and SupTech tools by regulated institutions and also regulators. Now, I'm going to stop there and just simply say, look, in terms of getting my background is at the back of the slides. More than happy for you folks, everyone out there to get in contact, and my contact details are there. Now, to ensure that we move through the presentation seamlessly, we're not going to stop and do an introduction of each speaker. So what's going to happen now is I'm simply going to say, I'm going to pass to Andreas. Andreas is going to take over. Once Andreas is finished, Neve will take over. Once Neve is finished, Michael will take over. And once Michael has finished his presentation, I will join you again for the Q&A session. So thank you for your time.
Thank you very much, Peter. I hope you can all hear me. As Peter actually said before, my name is Andreas Babaidis, working for the EBA. Good afternoon to everyone, and many thanks to Peter and the organizers for inviting me today in this promising event. So in today's webinar, what I'm planning basically to present to you is essentially briefly describe the role of the EBA when it comes to financial innovation, and continue with the EBA's approach on AI and advanced analytics, and then sharing some recent developments, including the regulatory activity in this area. So the EBA was established 10 years ago, actually. It's our anniversary this year. And it's a specialized agency of the European Union responsible to achieve a more integrated approach to banking supervision across the EU. The EBA is mandated, among others, to monitor market developments in innovative financial services, and most importantly, achieve a coordinated approach to the regulatory and supervisory treatment of innovative financial activities along with supporting convergence in supervisory practices, procedures, and approaches. Now, having as a starting point the Fintech Road Map that the EBA developed back in 2018 and the subsequent fintech-related priorities, the EBA has developed a series of publications on topics such as artificial intelligence, ICT, crypto assets, innovation facilitators, RegTech, and at the same time closely interacted with stakeholders on all the related areas. Now, of course, you can easily access and look at our publications by visiting the EBA website, and if you wish, register to the FinTech Knowledge Hub that the EBA has established. If you wish to interact with us and the community, basically, of stakeholders on FinTech-related topics. Now, one of our recent publications is the thematic report on big data and advanced analytics. Taking into account the growing interest and investments we have observed on AI in application to the finance sector, we decided to perform a thematic review with the aim to share knowledge among stakeholders and implicitly present the EBA's approach on the use of advanced analytics across the EU finance sector. As you may have seen, the report focuses on advanced analytics, techniques, and tools, including machine learning, which we consider it as a subset of AI. And these basically techniques go beyond the traditional business intelligence. I think here it's important to clarify something that Peter mentioned at the beginning. The report is an EBA product and got approved by the board of the EBA, which constitutes of the EU competent authorities. So the reference to the 11 authorities is only the people who helped to draft the report. However, it's an EU-wide basically paper as it's got approved by all the EU competent authorities falling under the EBA remit. Now, I'll try to present you some of the key messages that I think that are important from this report. I think the first one is what we consider the basis for adopting and implementing advanced analytics solutions. So we have identified 4 pillars for the purpose, which believe they can support institutions in the rollout of advanced analytics solutions and support with the development, implementation, and adoption of such solutions. So the first pillar relates to data management, and it mainly refers to the well-known data challenge. An appropriate data management framework needs to enable the control and security of data, taking into account the different data types and data sources, data protection, and of course, data quality, which is essential throughout the life cycle of such solutions. A successful data management approach should build trust, as I'm gonna mention later on, and meet legal requirements. Now, the second pillar, technical infrastructure, entails processing data platforms and infrastructure that provide the necessary support to process and run advanced analytics. Then organization and governance is the third pillar, as appropriate internal governance structures and organizational measures, along with the development of sufficient skills and knowledge, can support the responsible use of advanced analytics and ensure robust oversight of their use. And lastly, we do believe that having in place a related methodology can facilitate the use of advanced analytics solutions. Now, these pillars should be accompanied by a number of trust elements. That's how we name them. Essentially, these elements should be respected and properly addressed to support the sound rollout of advanced analytics solutions. As you can see on the screen, these include, among others, the ethics, which is one of the most important areas when we're actually entering the AI discussion. definitely data quality and data protection, and then other topics that I'm sure you've came across before, such as explainability and fairness. In summary, these elements place increased emphasis on the responsibility of institutions towards their customers when considering the use of advanced analytic solutions to ensure transparency and trust. Now, I chose some key conclusions from the report that we actually made that I think that are quite important and relevant to share with you. Starting with what we observed back at that point, that EU banks appear to be at an early stage in the use of AI when it comes to pace and sophistication, though, of AI solutions, with a focus on predictive analytics that rely mostly on simple models. A reason for that could be that more complex models, which can bring better accuracy and performance, may give rise to explainability and interpretability issues. Other issues could, of course, relate to legacy systems aspects, adequacy of expertise, and data concerns. And so at this stage, we observe that core banking data are currently the main flow feeding data analytics, rather than other data sources such as social media data, mainly due to institutions' concerns on the reliability and accuracy of that data. Now, a second conclusion is the relevant expertise and competence that we think that it needs to be there and needs to be developed to support the adoption of AI in general. And that's an important challenge for all of us, both for institutions, but also for regulators and supervisors. And we believe that training and development and definitely close interaction between all stakeholders could be an appropriate strategy and starting point to address this challenge. Now, when it comes to explainability, we do believe that we could actually follow a risk-based approach. So essentially, the explainability requirements will depend on the essentially the potential impact that AI solution can have on the business continuity of the institution or on potential harm to the customer. So that's how we basically see it. And lastly, throughout the report, we make reference to a number of success factors that could be taken into account for the development of AI solutions, ranging from having good data quality to having appropriate sufficient governance and methodological framework on AI solutions. Now, 1 year after the publication of the report and continue our ongoing interaction with stakeholders, let's see what actually we have observed so far. And actually, I'm happy to share with you some latest observations here. Now, through our ongoing monitoring tools, as you can see on the screen, we have observed a significant growth year on year on cloud computing across EU banks, which is relevant for, of course, our discussion today on AI, as cloud is perceived to facilitate the use of AI. And then at the same time, you can see that there's a significant increase on the use of AI in advanced analytics across EU banks. And we are observing slowly some EU banks moving from the development and pilot phase to implementation. But again, here, what is important to note that the AI solutions that we are seeing at the moment are not that sophisticated yet. So we expect more to come. Now, definitely that's an indication that EU banks and EU institutions are seeking ways to benefit from AI through cost savings, more productive business models, and new ways to compete. Now, through our ongoing interaction with stakeholders, as I said before, we noted a number of challenges in the progression of AI adoption, which may put an obstacle or prevent financial institutions to scale up data and analytics. Of course, data management is one of the top challenges that we actually noted here, and others relate to the time to solution, and that includes the integration with legacy IT systems. That's a big challenge there. That's something we also heard from the provider side. Then it's the difficulty to create trust around the ability of AI to deliver trustworthy insights, and that also captures and relates to having the appropriate internal culture to support this. And lastly, the lack of relevant and sufficient resources and expertise. And that's quite interesting here because regulatory uncertainty has been mentioned by some stakeholders, but we haven't seen the biggest challenge to progress with the AI adoption. And that's a message I actually want to make today. Now, a useful guiding principle to address these challenges could be one of the key messages from our recent virtual workshop on AI, which took place in October 2020, which noted that not every problem requires the use of sophisticated AI model. So essentially, the use of complex models may lead to higher accuracy. However, this may not be necessary if required results and acceptable level of accuracy can be obtained using simpler models. And definitely, I want to note the positive feedback and comments that we're receiving from different stakeholders, also supervisors and regulators, on the value and the significant benefit that all these actual interactions and events have to this AI community. It's a new topic, so we all actually need to learn, and there is a great value here for all of us. Now, lastly, moving to what's happening from a regulator side, definitely I'm sure you've noticed a number of AI-related policy products, either white papers, reports, etc., that have been published in the last 2-3 years from EU and national authorities. And of course, the objective there is to provide some regulatory certainty where needed, but most importantly, highlight some new risks and challenges, and definitely make some references to supervisory expectations at this stage. However, what's important and what actually would suggest to all of us to keep an eye on is the upcoming legislative proposal on the EU-wide AI, let's say, regulation, which it's expected by the European Commission this quarter. So what we expect from this legislation, the proposed legislation, it's subject high-risk AI systems to mandatory requirements related to their trustworthiness. So in the white paper, for the ones you're actually familiar with it, there was no explicit reference to financial services, but we expect some impact, and probably we may have something in the final regulation, still we don't know, related to financial services. And on the slide, you can see, of course, the process that the Commission follows, and definitely all the EU agencies are following when it comes to publication of a policy or legislation related, of course, products. There was, of course, a public consultation on the white paper last year. European Commission received more than 1,000 contributions, and now we're expecting the proposal. So it is therefore important for all the stakeholders to contribute to the policy-making process, which could have an impact, of course, to the entire finance sector. And we're keen to continue our close engagement with all the stakeholders, and in particular to the potential development of supervisory guidance on the use of AI in finance, which may come on us, on the EBA and the other ESAs after the EU-wide legislation on AI. Thank you very much for your time, and I'll now give the floor to Neil.
Thanks, Andreas. So today I'm going to focus on a practical approach to big data. And I'm going to talk about 5 areas that I believe are really important when embarking on a data analytics project. First one is, what problem are you trying to solve? The second, data sources you are using. The third, your data governance framework. Fourth, analysing the data. And fifth, the business adoption of your data and analytical solution. So the first area of focus is around the problem you're trying to solve. In my experience, it's really important to understand and frame the problem before you attempt to try and solve it with data. This is where your business experience is most important and can help to identify your hypothesis, which in turn can be tested rigorously using different types of data and methods. So time, in my opinion, should be taken to work through this understanding. In a lot of projects do not get the required results because of the lack of time spent in this critical phase. Think of it like the building. When you're building a house, you do the foundations first. This is the foundations. Once you have a thorough understanding of the problem you're trying to solve, you should also be able to define success criteria for fixing this problem. So the second area is data sources. And again, Andreas would have mentioned this in his presentation under the heading of data management and combined with data governance. So there's 2 main types of data, structured and unstructured data, and they're the ones that are most commonly used. So structured data is organised and it adheres to a predefined data model. I suppose common examples will be your SQL databases. They tend to look a lot like Excel files, rows and columns. So many people on the call today will be familiar with structured data, especially those from credit institutions. So structured data in these types of institutions will be, or organizations would tend to be your core systems, your transactions, your transaction systems, your credit, your accounting systems, etc. They're probably around for a long time and there's not that many changes made to them too often. The second type of data then will be unstructured data, and this is a relatively new phenomenon. So I suppose in the last 10 years or so, really, it's since unstructured data exists. A predefined format, like traditional column row format, they can be anything from log files to videos to emails to social media posts, audio, etc. I think it's important to note that the bulk of data that's been generated today is unstructured data. So in order for organizations to be able to make decisions on this type of data, they really need to be able to manage it and to analyse it. And another area that comes into consideration for data sources would be external data. So the structured and unstructured would tend to be your own internal data sources. But if you're using external data sources, merging or joining external data with your internal data needs some consideration. And I suppose this is to ensure that what you're comparing between both sources are aligned and you're measuring like with like if you're using 2 different sources, and that your definitions, you spend time to look at your definitions there. The third area is data governance. So this is a set of principles and practices that ensures quality throughout the complete life cycle of your data. So for data quality, you need to be able to ask yourself, is your data complete? Does it cover all of the cases that you require? Is it correct? Does it contain errors? If it does, do you know what they are? How common are they? Are there missing values in your data? So understanding anything like this that could potentially impact the validity of your outputs. Data lineage is also really important, and this will help you to ensure that you know the source of your data. Is this the data that you should be using to solve the problem? If you don't have data lineage, you're going to really struggle to be able to take your data at face value. You need to be certain that your data hasn't been manipulated in any way. So just for example, if you were looking at, I don't know, loan data, that the data associated with that loan, that it is actually the loan date and it wasn't the application date. So you need to be really, really certain about where it's coming from. And you need to make sure that it hasn't been transformed or manipulated in any way, or that there hasn't been any assumptions applied which could mislead to how it's used in your data project, in your analytics project. Also to consider is around how you transport and access your data. So ideally, this would all be in an automated structure. So in your database tables or wherever the data is stored. But in certain instances, it may not be structured automated sources. It may be the likes of Excel or alternatives. But again, they have huge amounts of risk associated with them. So again, data governance is key, regardless of the source. And I suppose just from a data protection perspective, all financial services firms have a duty of care in this space, and the introduction of GDPR over the last few years really ensures customers' data is only used for the appropriate cases. And this level of data protection helps financial services companies to build trust with their customers, because this regulation is very, very transparent. So the fourth area is around analysing the data. And again, this would have been very similar to Andreas's analytics methodology piece that he included in his presentation. So there are four main types of data analysis. These are descriptive analytics, which is probably the simplest and the most common use of data in business today. It answers what happened in the past, and it tends to be your standard reports, MI, and dashboarding. The second type is diagnostic analytics, and this tends to be a deeper dive of the what happened and asks, why did this happen? The third then would be predictive analytics, and this attempts to answer the question, what is likely to happen? This basically takes historical data and tries to make predictions about future outcomes from this data. And then the fourth type is prescriptive analytics, and it's the most sought after at the moment, but there are not many organizations equipped to deal with the prescriptive analytics today to perform it. It uses state-of-the-art technology and data practices, and it's a big organizational commitment. And I think any company that's embarking in the prescriptive analytics space, that they really need to be very well advanced in their data and their analytics journey. And again, as a lot of people on the call will know, that it's no mean feat getting to there. And AI would be an example of prescriptive analytics. And then the fifth, my slides, the fifth and last area of focus is really around tying all the pieces above together. So it's about supporting your data consumers. So what are data consumers? So in the instance that I've spoken about here today, they'd be the business area that highlighted the problem or who you are working with to solve the problem for. And I think an important point to note here is that a lot of stakeholders across your business, they're extremely competent in their roles, their day-to-day roles, whatever it is they do, but they may struggle to interpret data, and especially depending on how it's communicated to them, whether it's visualized or whether it's presented in a group or one-to-one. It can be tricky. And evidence would suggest, and I totally believe this, and it's what I've seen in my own experience, is that the best outcomes for adopting data are when the data consumers and the data providers are working hand in hand together, and they form strong business relationships where they feel comfortable challenging each other, and they're spending time to get to know how to solve problems together. And this would allow them to maximize the business understanding and the key insights that they're getting from the data. I suppose if you're a data provider and you're presenting to your data consumers, make sure that your outputs are really, really simple. So whether it be like anything from an insight report, or whether it be a model, the outputs of a model or the understanding of a model, use infographics, use graphs and visuals, standardize your colors, fonts, everything. But again, have the more granular detail to hand so you can answer any questions that they may have. So I think if you start simple, you'll tend to tease questions or challenges from your data consumers. If you bombard them with information, loads and loads of tables or graphs or just random stuff, I think sometimes you find data providers spend a lot of time working on key pieces of data, and they always like to include it in their outputs, which it may not fully be relevant. So again, if you're doing anything like that, not keeping it simple, your business, your data consumers may become confused, not fully adopt the work. And again, hence why I think if you have a really strong working relationship with your stakeholders, they'll be able to challenge you. And I think it's very easy as data providers to go down rabbit holes. So, like I said, this is a really cool piece of analysis, but does it really tie back to the problem you're trying to solve? I think as data providers, you really need to push yourself in your data consumer shoes and think of what they would want to see to solve the problem. So again, just to recap very quickly on the 5 area of focus. So really understand the problem you're trying to solve, involve your business stakeholders or experts in this process, don't exclude them. The more people coming together to solve this problem from different viewpoints, the better the results you will get. identify your sources of data that you will use to solve your problem, internal, external, whatever it is. Your data sources, be comfortable with them, be comfortable with the quality around them and the lineage, and then decide on the type of analysis you need to do to solve your problem. You may use more than one of the analytical methodologies. You may use diagnostic and predictive. You know, it's not one only. But again, try to figure out what it is the best methodology to solve your problem. And then again, just the last part, as I said there, it's really tying all of the pieces together and presenting your data back to your data consumers so that they can understand your outputs and hopefully you've solved their problem for them. Now, this more than likely won't it won't be done in one slot. So again, it'll more than likely be an iterative process. So again, iterative, work through it. So that's everything from myself, and I would like to hand you over to Michael.
Thank you. In the next 10 minutes, I'd like to talk to you about the impact that AI and analytics has had on the financial service industry. So I'd like to start off giving some context, right? Where the industry is today and also some general trends that we see. On the left-hand side, data, right? Data has been growing at a rapid pace and only accelerating. Estimates, I believe in 2010, the amount of data that was out there was 1.2 zettabytes. So that's so for context, zettabytes one zettabyte is about 1 billion terabytes. Pretty big, right? In 2020, that was roughly around the 40 zettabyte range. And I think in the next 5 years, the estimates are that it will go up to 150 to 200 zettabytes, right? So that's a lot of data to consume and process manually. Next, I'd like to talk about business disruptions. There's been market-changing events throughout our history, right? It's brought, obviously, market volatility, but it's also changed the way we think and the way we work, right? It has had different impacts on different institutions. And I think a lot of companies, you know, with the most recent one with COVID-19, I think a lot of people are reevaluating. Now, how do they scale? How do they scale to handle the trade volumes that were brought forward, right? How do they operate with a limited set of resources? Could they be as effective as before? Could they be more efficient, right? Now, change is the norm, and people have to get used to that. So what do, right? With change being the norm, it kind of raises the need or the importance of agility, right? It's about how do we be faster? How do we be smarter? How do we be more adaptable? And many people are turning to data-driven decisioning and processing, right? So, you know, many are adopting newer, more modern data technologies, and also starting to use AI to create these intelligent machines to help with the processing, again, getting faster and smarter. Next, I'd like to kind of take you through some examples of applications that are using AI. You know, in the trading world on the left, starting with the left, I think in the trading world, we have some of the earliest and best examples of analytics and AI applications, right? So starting with algo trading, which many of you are aware of, right? It allows us to be able to process hundreds and thousands of inputs, you know, evaluating and determining the best trading strategies or determining the best price at blinding speeds, right? Like it's no human or set of humans could honestly match that speed, right? And I've seen trading desks upwards of 30 to 40 traders get evolved and replaced with algos and a smaller set of traders, right? With different functions, of course, to really just shift of responsibilities, to more of a monitoring, a control, adjusting, and be a fail-safe, right? I think the world has changed, right? As you can see, part of the volatility is due to all the algos that are running continuously, right? It's just how the industry has evolved. From a trade execution standpoint, there are more innovative and complex strategies now due to AI, right? It's made it feasible. Think about executing super large trades, like I want to buy a billion 5 years or a billion, say, IBMs, right? At a particular price. With advent of AI allows you to break it and execute them throughout the day at smaller trades, allowing you to not affect the market and move the market adversely. Also allows you to kind of look through and say, hey, I'm executing at different prices. I'm actually then computing the weighted average and ensuring that I'm hitting that price target that the customer wanted. And that's something new in the last few years that was not truly possible in the past, right? Think of a large company like a PIMCO or a BlackRock coming in and actually trying to buy a Cedric. They will obviously, first, there's not enough liquidity. But the other side of it is once they come in, the market moves against them. And so, they've worked with many institutions now to kind of create this more covert way of fulfilling their needs. And there's many more examples, right? But moving to risk, since trading has moved and now executing and processing at a super fast-paced, risk and all the supporting functions and control functions also have to move in that area, right? Following and replicating that speed. The highlight one in risk, obviously, is the most common one. It's about understanding the exposure that an institution has, right? So think about now with AI, you can actually calculate that risk at a pre-trade level, understanding what risk you're taking on to your portfolio before you actually make that trade, right? And in theory, you can incorporate that into your price and start moving toward the world of risk-based pricing. That's one example. Another example, the common one is fraud, right? Think about accelerating our ability and not only identify, but also mitigate and even prevent, right? Being able to stop these activities from happening. You really think about the amount of trades that we have today and being able to find patterns and anomalies across all these different product types across your global organization and try to identify and stop a global money laundering event, right? That is progress. That is something that's only capable through kind of utilizing AI. Lastly, on the right, I want to bring kind of the common case from the retail side. The focus has been on personalization, about what the customer may want or need, and it's really we've been working with the customer to predict a closeout or a default event by analyzing the activities that they've been doing, and it's on a cutting edge, right? It's really kind of helping companies provide a better service, but also have a better service to the customer. So these are all kind of measures that will obviously bring efficiencies, bring cost savings, but also provide a better service at the end of the day, right? So just the world is moving toward. Think of having a personalized financial planner or advisor that's always there for you, working for you, helping you, and guiding you, right? And a lot of these newer kind of banks, like the internet banks, the neobanks, they're heading that direction, and they're really kind of transforming the industry and forcing the stalwarts to really kind of rethink kind of their business model. So it's good for all. I think they all with all these institutions kind of, with all the new additional competition, with the fee and spread compressions, more demanding customers, it really is kind of forcing people or institutions to really think about that they need to adapt and change and be faster and smarter. And so, how do you do that, right? So, now I think it was mentioned by Andreas and Liam, a data platform, right? And a proper data platform helps makes your data an asset to you. It makes it work for you. And for us, we think about it in three main areas, right? It's about agility and flexibility. I think just being able to handle all your new requirements from your business is a challenge. It's a challenge today. It's only going to get more challenging as we move forward. And really what you want, since day one agility, you need to have platform agility too. And that also means being able to take your rich data internally or its external data and bring that all together, rationalizing it, harmonizing it, and then making it available to more innovative services, whether they're in the cloud, through new fintechs. But it's creating that connection. It's really enabling companies to use all the new features that are out there. Next, quickly, speed and scale. It's always been a factor. It's always been a need. It's always going to be there. You think about with COVID-19, you think about being able to scale accordingly to the volatility and to the volumes that are coming out. General overall volume, but also these kind of volatility spikes, right? Being able to handle those. We had one customer of ours that basically was gained 50% market share because they were able to handle all that volume while their competitors had some challenges. Lastly, there's always going to be complexity. We're always trying to do more with less. So the real point I want to make around here, it's really about looking at a system that allows you to manage, control your environment and your data. It's really kind of very key to make it as simple as possible for you to change, but also to use and also to really kind of enable your businesses. I'd like to quickly talk, we talked about operational efficiencies, but in certain circumstances, this could become a business viability play, right? Certain businesses may not be able to survive if they don't change. And I think one of the critical aspects is it's really how do you guide your company forward? I think how you handle your data would be a critical step, right? And I outlined kind of three main features that you would have in your data platform. And I think a strategic data platform really kind of is the foundational step to help you move toward data-driven decisioning and processing. And from my view, obviously, it's an investment that will have a great ROI to you. So, hopefully that was useful. And I'll pass it back to Peter.
Right, Michael, thank you very much for that. Really enjoyed your presentation. Also, Neve and Andreas. And guys, I would just ask that hopefully you have now got your microphones back on and your videos back on as we go through the Q&A session. I think probably one of the things that I was thinking very much about as we were going through the presentations. Firstly, again, thank you, but there was quite a nice flow. One of the things about presentations in this area is that we could sometimes fall over each other making the same points, but starting with the EBA and moving to Neve on the governance practice, I thought was excellent. Neve, you made me think of a lot of questions about what board directors should be thinking about in this area as well. And then Michael talking about some of those sectors themselves, trading risk. And I was even thinking about in the world of payments, the adoption of AI. Barclays put out some information about that recently, and just exactly how we tackle the utilization of AI and machine learning in trying to crunch the numbers. But what I'd like to do is firstly say to the audience, look, guys, if you have questions, please get them into us. The Q&A is open. It is live. We have some questions coming in, and I also have some questions I'd like to ask the panel. So I'm going to kick off. And we have our panel session going until 3:30. And Andreas, I'm going to throw the first question at you. Looking at the adoption of AI in credit institutions, I see in the EBA report figures around the percentage number. I think it was 64% of institutions are reporting they're already launched big data and advanced analytics solutions. But to get there, they could be using natural language processing, they could be using machine learning, or indeed they could be using AI. So can I just check with you? I mean, how can the EBA support the adoption of artificial intelligence in the finance sector? And I just might ask the speakers, if you're not answering the question, just pop your phone onto mute. Thanks.
Thank you very much, Peter, for the question. And indeed, it was 64%, that's right. But that can cover, as you mentioned, a quite broad range of different AI applications. So we need to be careful, as I said also in my presentation, on how to, let's say, interpret the numbers. Now, what we are doing to support, let's say, the uptake of AI, and of course, there are a number of steps we have taken, but definitely our guidance, let's say, and steer will also come from what the Commission will be saying in the near future in this area. Because we are at the point where a legislative proposal will be coming. So definitely for us, it's very important, I said before, to enhance the engagement we're having with the stakeholder on this. I think the establishment of the different innovation facilities as we've seen across Europe, mainly regulatory sandboxes, innovation hubs, can actually have enforced this engagement between the industry and the regulators, and they at some point gave some supervisory clarity on what supervisors are expecting, and that also helped the institutions and providers to get some, let's say, certainty on how to proceed and what actually they can work on. And definitely from our side, we do support these different basic innovation facilitators. We do support them. We want to enhance the interaction we're having with the industry and all the different stakeholders. I mean, for example, for the port that I've mentioned before, we did interact with academics because we know there's a strong research going on in academia when it comes, for example, on explainability, and then the relation with black boxes, let's say, models and issues. And of course, with EDPS and EDPS, when it comes to the data protection, the GDPR aspects, because data protection sits in a different authority with the EU. So the next thing that actually we're doing is trying, where possible and necessary, to facilitate this regulatory certainty when it comes to the use of AI in finance application. The thematic report we are doing, we actually it goes towards that direction, but we're also planning to release a discussion paper on the use of machine learning on regulatory internal models for banks, which is an area that would identify that it may actually benefit for some clarification. And definitely we expect, let's say, some more on us, like developing some guidelines. Maybe we need to wait and see on what's going to come from the Commission side. And definitely, as last, but it's very important for us, it's our mission to support an EU coordinated approach when it's going to come to that from a regulatory and supervisory perspective.
Thank you very much for that, Andreas. Actually, just while we're on the topic, there's a couple of questions which have come in from the audience. Two are actually sort of focused on I think the implementation of these approaches by local regulators that are in a member state. One question that came in was around open finance, and indeed pointing out that in pre-Brexit, when the EU was part of the the UK was part of the EU, that there seemed to be a lot more competition or regulators helping open finance firms break through competitive barriers. And that question has come up here today. And look, I was wondering, the role of the EBA does involve looking at issues of competition. I'm not trying to put you on the spot, but in relation to that, how are the lessons learned at, say, an ESA like the EBA and proposals, how are they adopted by the member state national competent authorities, particularly around, fostering innovation and things of that nature?
That's a good question. Although on PSD2 related matters, because I've seen the question, I'll need to take this basically with my colleagues who are actually a PSD2 expert. But in general, that's a good question of what actually you mentioned. So depending, of course, on the regulatory products that we're gonna be actually releasing, there's a different, let's say, route that it's actually going when it comes to the national competent authority. Definitely, you need to have in mind whatever we produce, it comes from all the 27 now basically authorities essentially. Now, when it comes to the national implementation, on guidelines, for example, there is of course the flexibility for the authorities to do something more if they wish to. However, there needs to be a minimum, let's say, respect and applicability of the guidelines themselves. So one of the missions that we are having as EBA is to ensure convergence, and that's one of the missions and also challenges for us, to ensure that whatever we are releasing, it's actually being enforced and implemented at the same way across the EU. And there are a number of exercises we're doing in basically for identifying potential, let's say, issues when it comes to convergence, and we're trying within, let's say, our community to resolve them. And that's why many times you may see some revision of guidelines, some clarification, some opinions, just to address this issue.
Thank you very much, Andreas. So, Tom, I think I can call out your name. Thanks very much for your question. Andreas said he's going to have a look at this with his colleagues. There's another question which also came in around the alignment of our local Central Bank of Ireland with EBA regulation. But again, I don't think it's something we'll jump into on this seminar. It's really something for a discussion with the central bank. But I noticed to see the Central Bank of Ireland wasn't one of the IT supervisors that was in the appendix of the report. But I would suggest that the individual who's asked that question do have a look at the Central Bank of Ireland strategic plan for 2019 for the next 3 years, and do have a look at Ed Sibley's speech on financial innovation. The question I wanted to then move to is over to Niamh, if I may. Niamh, thanks very much for your presentation. I sort of looked at your presentation as a little bit of a blueprint for firms that are either about to adopt an exercise in this area, or they're trying to get their head around about how they should approach this, whether it, kicking it off with a pilot and then moving to business as usual. But what I'd like to know, because you have a banking background as well, is if you can hear me here, is what are the potential missteps for banks and other financial institutions when they're moving from a pilot to a business as usual environment? And you made some great points in your presentation as well. But I'm just wondering, would you be able to expand a little bit on that topic, please? So what are the sort of potential missteps that you think banks and other financial institutions could encounter when they move from a pilot to business as usual?
So again, I'd say firsthand, or first of all, it would be definitely around what are you trying to do? You know, like, is what you're trying to do, does it need models? Does it need AI? You know, be really, really clear on what it is you're trying to do and what you're trying to achieve from that. So I think that's critical, because obviously there's an investment required there. There's an investment, a financial investment. There's probably a human capital investment, training investment, data, all of those different component parts. So be really, really clear on what it is you're doing and the value that it's going to get for the business before you move from pilot to live, basically, or to full scale implementation. I think that's a really, really important point to note. I also think as well, you know, a lot of senior people across organizations, they know analytics is really important. They know analytics is in their organization, and they've large analytical and data functions, but it probably needs to be demystified a little bit more, in my opinion, at the senior level. I think, you know, really you should be able to walk into a room of senior leaders and explain to them exactly what it is you're doing. And if you can't do that, if the problem or if the solution is too complex, that there's a mismatch there between what's actually been done and then the value that that's going to be adding to the business. So I'd say, again, it's really back to solving your problem, really being clear about the business benefit, what you're trying to do, the business benefit for the organization before you invest any further capital in it, and then I suppose, any budget to it. And I think then again, making sure that your senior stakeholders are really aware of what analytics, data and analytics can achieve, because if you're selling that story, if you're telling that story and selling that message correctly, you should get the buy-in you need to do what you need to do at a ground level, and really you should be able to reap the rewards of your outputs.
Yeah, I mean, you make a couple of really good points there. And I was sort of thinking about some of the non-executive directors sitting on the board of the company. You know, the executive team is saying the new strategy which we want the board to adopt and accept. It's going to help us foster. We're going to carry out financial innovation across the company. And therefore, we've got this big data strategy we want to give to the board. But it sort of sounds from your presentation, the comments you just said, is maybe the first question from the board, maybe, hey, what is our approach to data governance? And go through those items that you've already mentioned. What is our structured? What is our unstructured data? Because how do you get to your strategy? How do you get to your implementation? Yeah. If you don't understand that, would I be right there?
Yeah, and I think it's really so you may want to say to them, look, we've done a pilot, it's been really successful, here's the outputs, we want to move forward. But again, you know, I think from a board member's perspective, it should be, well, what are the key foundations that we need to have in place? So definitely data governance is huge. So your data and your data governance around that is fundamental. If you do not have that right before you start any large analytical program, you won't be successful. Like, you just won't. So that's critical. Then around, okay, well, what staff do we have? You know, like and the tech stack, or the technology that you're going to be using to support that. You know, you're going to need people to work on it. You're going to need the right technology. So what do we need there? And then I suppose you need buy-in from the business as well, because analytics is there to support the business. It's to take certain tasks away for the business, or to enhance to provide the business with more information, more insights, more forecasting, whatever it is. So again, it's about really selling that, giving that message to the business and saying, like, we're here to help you. We're here to take some of these tasks that you're doing today away from you and make your life easier so you can do more of this. And I think, again, if you don't have buy-in from, so they're the kind of fundamentals that I think at the ground level that will help something really thrive in an organization. But from a board perspective, then I think, I'm not sure if they would ask those questions. Some may, some might not. But I think if you're trying to, again, move from pilot into go live, that's the type of story that you should be selling. And it's not just selling it, but that's what you should be doing on the ground. That's what in my opinion.
No, thank you very much for that. Michael, if I could ask you a question. Thanks very much, because you gave these examples of trading risk and customer insights in your presentation. And I was talking in my presentation without giving anything away, about the risks that need to be managed. And Neva's already just spoken about at a macro level, one of those key risks there, about knowing what your data is. But a number of the banks are really, we look at the EBA report, what it's saying is that they're using their banking data in terms of analysis. But if I could just read something out to you, it says in the EBA report, core banking data are currently the main flow feeding data analytics rather than other data sources such as external social media data due to institutions' concerns about the reliability and accuracy of that sort of external social media data. But I was just curious, in your experience, are financial institutions looking at this external data, begin to analyze it, and indeed to integrate it into their own, I guess, proprietary data? Are you seeing this at Intersystems?
The short answer is yes, right? So we kind of see all of this as a evolution, right? So it really is part, as I think we all mentioned, it's a learning process. And as you learn, you understand more and you gain trust about what you have and how to use it. And it would be unfair to say that they're not looking at that data. They are. It's just how much would they trust it to use in a true production environment and driving kind of actual business decisions, right? So I think what's the best way of putting it is that they are looking at it. They are looking at it in parallel and seeing how they can incorporate it properly. And I think part of it, where Nemo is actually saying is just like, how do you evaluate the data? How do you verify that the data is correct? Part of it is through just working with it and just understanding, or putting some safeguards, putting pieces in place to help you kind of really understand what you have. And from that, it's a slow incorporation about what things can you use that you trust to obviously improve your capabilities. But they are using it. It's just taking more time, right? Because part of it is, I think what was mentioned across, just like with these institutions over time, how do you trust them, right? It's just another source. And so obviously you're going to trust your internal data a lot more than your external data, but it's not something that you can disregard.
No, thanks for that, Michael. And there's a couple of questions that have come in around personal data obligations. And I think one of the tricky things is that we start answering those questions, and although thank you very much, and what we'll try and do is we'll get some of the folk on the call to come back and we'll put together some answers to some of these questions. But on the personal data questions, thank Mick for your question there, is about, look, how does all this sit in terms of personal data? We obviously have our obligations. You can go back to the original data protection principles about fair processing, people knowing how long the data is going to be used for, etc., how long it's going to be retained. But it is by itself such a huge area. I think maybe we may need to think about doing a big data and data privacy seminar focused on fintechs. One question which has come up, I'm going to throw it across to Andreas, because it actually fits in quite neatly, Andreas, with a question I wrote up that I sent you a little bit earlier. And somebody has come out and said quite, which I'm smiling at, said, what are the skill sets from an IT perspective that would be the future of big data for an old timer in development? Is the skill set gained so far not in big data on the way of the dinosaur? And I guess rather than having you answered that question and that thought, I wanted to ask you, because skill sets is something that is called out by the EU. And you actually, in your presentation, Andreas, you talk about the necessary competence that you say will become increasingly important when the use of AI and machine learning techniques become more widespread in financial services. What do you mean by the necessary competence?
So thank you, Peter. And that's actually a very interesting question. I've actually seen it. And there are also a couple of other questions that I want to pick up if I can after this.
Please.
So yes, I mean, what we've seen and what we've heard basically from the different stakeholders is that one of the key challenges that seems to be preventing the institutions to move forward, let's say, with the adoption of AI in general with new technologies, it's internal culture. So many institutions are trying, let's say, to switch to being more digital. I'm sure you've seen a bunch of different digital transformation programs, which actually they aim exactly to this. One of the core aims, basically, is to make the people, the staff, more digital, and that can actually help the culture and also the adoption of new technologies. So definitely, there's a different profile for the person who's gonna be, let's say, the developer, the software developer of a solution, but definitely we have a number of other roles actually after that. What we are basically suggesting is that there should be a basic level of understanding across the organization when it comes to AI, and you start from the top, basically, tone at the top. You need to have someone in the management body and executive management who understands, let's say, what's happening with the AI, what does it mean, how we can actually understand it. Then we need to have, again, understanding and knowledge and expertise at the second and third line of defense. They need to be able to manage the risks that are actually seeing from these new solutions, and then internal audit at the same time needs to be able to audit that. Then we have the staff that is using the AI as a whole, that they also need to understand what they're doing. And definitely the developers, they need to understand the impact that the AI that it's basically have on the organization. How does it affect the organization? So bringing together, yes, the technical aspect, but also the business knowledge, which is one of the big challenges here. And that's what we need. Now, this expertise, this competence, of course, needs to be also reflected on the advisor side. That's something that we already mentioned across the supervisory community. We need to build expertise, both for understanding what actually a supervised institution is doing, be able to supervise, but also to leverage technology and AI internally. The subtech, let's say, area. I'm sure you heard this buzzword before. So that's, let's say, in a nutshell, of how basically we're seeing the competence now and definitely in the future. If we're gonna see this upcoming, let's say, trend being materialized.
Sure.
And yes, at some point, whenever you wish, I want to touch on a couple of other points.
Yeah, because I mean, in fairness, you always wonder whether you'll get a lot of questions in, and actually, as I look at the questions rolling in, there are so many subtopics to them, and they're just brilliant, and they're just areas that we couldn't have covered in the presentation. Otherwise, our session today would probably go on for 3 hours. But one question I would like to throw out there, and if your name is not written in the text of the question, I won't read out your name, but if it is written at the end of your question, I'm going to take it that you are happy to have your name read out. So this person hasn't put their name in the question, but I do know this individual quite well, works at a very large Indigenous payments business based in Kerry. And he asks for Michael. Michael, the question for you from a very large payments business, Fintech, is artificial intelligence and data always about volume? You showed some great slides about volume. Or is there a way to bake it into the operating models early on when there is just a trickle of data? And so where AI can grow, within the business. So, can we start with a trickle of data, or do you need to have a huge amount of data to start the journey? Over to you, Michael.
That's a great question.
That's why I'm giving it to you, because I can't answer it.
Thank you. The advice I would give is that it's really a comeback to agility, right? You're not going to know all the different things that you would have to consume. and nor should you, right? So as we talked about structured and unstructured data, there's always going to be something new, and you want to be able to incorporate all of it, whichever one you think is best. And so kind of to answer that question is you should be able to. Now, the trickling aspect, I don't think from a platform standpoint, it really matters as much of how fast the data is moving, how much of the data, because it's a conversation around enablement. Now, from a data modeling or AI and machine learning aspect, yes, that would be a concern when we talk about completeness and being able to train your models and actually utilize and understand kind of trends and aspects of your data. So in summary, I think there are easy techniques to be able to handle that, right? And, I think you, as a foundational step, you want to make sure that your system's able to handle fast-moving data, batch-oriented data, being able to connect to legacy sources, also being able to connect to more contemporary ones out in the cloud, right? So think about APIs, connecting through web services or web APIs, being able to stream data through as messages through Kafka or through some proprietary ones. You should be able to take all sorts of data and be able to analyze it, right? And again, I'm separating the structure of being able to handle it and then the enablement function versus the analysis function itself, where you have either data scientists or you have quants or quantitative developers being able to look at your data, or even business folks looking at their data and determining how useful that is, right? That's a separate question, and to be had around how do you use.
Thanks very much for that, Michael. Look, very quickly, I'm conscious of time. We're up against the clock here. So Tom at Loanit, we're going to get a response back to you. Carl, listen, thanks for your question. Carl is at a new tech fin, or a new fintech, or a new tech fin, a mortgage tech company, and was asking a question around the regulation of fintechs there, Andreas, that aren't already regulated. So actually the move by the EU to regulate TechFin, I don't know whether that's something you feel you can comment upon here today, but is that something that the Europe is looking at?
There are a couple of points I want to make here. So definitely the principle that we are supporting a CBA, and that's also you can find in all the financial innovation related topics that we are actually working on and publishing. It's that we do support, and we do actually think that same activity, same risk, same supervision principles should apply. So once, let's say, someone enters into the regulated financial activity sphere, then there is, let's say, an element of supervision and falling under different, of course, authorizations. However, when we are talking about providers, I think that was the question. So providers of technology, providers of ICT services in general, of course, we are having at the moment the legislative proposal by the European Commission. It's the Digital Operation Resilience Act, or else known as DORA, where essentially we expect to have an EU-wide oversight framework for the critical ICT third-party providers. So this, of course, is going under discussion at the council at the moment. So at some point, we will get a legislation as such. But the idea there is to identify the critical providers at EU level, falling under, of course, ICT in general. These include cloud services, data providers, etc. So if one ICT provider is considered as critical, there are some criteria already actually listed, then it would fall under this oversight framework. And there are a number of, let's say, requirements and provisions, and let's say a light supervision, if I can name it, that it will actually fall under this new players essentially. But
Sure.
this we expect it to take actually form in the next 1 or 2 years.
Okay, that's great. So, look, I'd like to say thank you to all those that did send questions in. I did beg whether we could go on for a little bit longer because there's some great questions in here, including around how do we prevent bias or protect against bias, built-in bias, which I'm sure Neve would have been a wonderful person to answer that question. Built-in bias into AI. But what I've been told is that because the way we book the system, look, we're going to have to look it down now. So without further ado, I would again like to thank the whole team at Intersystems, Cara, John, Hannah, Michael, for all your effort. I know I didn't mention everybody for pulling this together in terms of the technology, for supporting FinTech Ireland on the idea. Andreas, thanks. It's always wonderful to get somebody from one of the ESAs, one of the authorities, be able to talk so clearly and eloquently about the work you're doing, and we hope we gave the EBA a platform further that will generate further interest in what you're doing. And I guess the message there is to ensure that if you are in the ecosystem, please do participate in these consultations, because you always, you may get the regulation you asked for, but you'll always get the regulation you didn't ask for. So it's important to contribute and leave your practicalities from banking to health, and we've got questions in the healthcare areas coming in. That was fundamental to people understanding how they should go about big data practice. So thank you so much. Michael, for bringing a lot of the experience in from industry and trading and risks and how to manage all this, and just the growth of data and how we manage it. AI and machine learning was wonderful. So without further ado for me, I'd say thank you to everybody. I'm not sure I've missed on anything I need to say at the very end, but all those questions that are sitting in the inbox that haven't been answered, we'll have a stab at getting back to you on those questions. And Intersystems will send out a message with the recording of the session and where it will be available. So Andreas, Michael, and Neve, thank you very much for your time. Thoroughly appreciated, and I hope we can all work together again one day.